Good morning, good afternoon, good evening. Welcome to the first ever ITC DIA Europe webinar. Thanks so much for joining us. In these sessions, we'll be discussing the latest and greatest moves in the insurance and Insurtech spaces and helping you innovate and move forward into the future of insurance. Because we want to show our appreciation, all attendees of this webinar will be offered a €200 discount on tickets to the June event in Barcelona. Sometime along this webinar, you'll be able to find the discount code webinar062, which you'll see in the chat box on the right-hand side, so watch out for that. Before I begin, I just want to let you know that there is a QA function on the right-hand side of your screen. You can upvote questions you're particularly interested in, and we are going to prioritize the questions with the most upvotes. So make sure you get those questions in early and make sure to upvote as well. Right, let's get started. Today's topic, the impact of economic turbulence on insurance in 2023. I am very lucky to be joined by, as are you, Marguerite Soeteman-Reijnen, Chair of Aon Group Holdings, Ali Hasan as well, Chief Medical and Healthcare Officer at Vitality. Marguerite, thanks so much for joining us. How are you doing today?
Thank you very much, Merlin. Excellent. At the sunny side of the North Sea at the moment.
Yeah, well, actually managed to catch me in London on a rather nice, crisp winter's day as well. So long may that continue, although I think we all know it won't. Ali, also pleasure to have you here. How are you doing?
I'm very well, thanks. Thank you to you and the ITI team for having me, because it's a privilege to be here talking about this really important topic.
I assure you the pleasure is all ours, Ali. So without further ado, let's get started. Kicking off with focus areas for insurers in 2023. Ali, I'm going to pick on you first with an interesting question. Do you think insurers are going to have to focus on cost at the expense of service?
I don't think the two things are polar opposites. If we take a step back and think where we are at the moment, we've been propelling through more than half a century in terms of the relatively recent history of work, where we're continuing to be expected to do more with less. And I think recognizing the economic challenges that exist now, it's remiss of us, compared to other industries, to not think about how we can be doing more for our customers in a more challenging cost envelope. But again, cost and service are not mutually exclusive terms. And I think if you look at what's been happening in insurance more widely, technological transformation, which is happening really in every B2B and B2B2C industry within insurance, is going to help customers get the products and service they want, the pace they choose, with the involvement they prefer. This move to digital should come at a lower overall cost than the traditional model of service that's very much people-focused. There was a report by McKinsey, Insurance Productivity 2030, that said roughly 40% improvements could be made in productivity and OPEX reductions. And I could see that number being totally reasonable, even if higher, whilst maintaining the same or better levels of service.
Marguerite, what do you think? Cost at the expense of service, they're not mutually exclusive, as Ali says. Do you agree?
I think that, we've seen in 2022, just looking back for a quick moment, we've seen, funding, private funding was drying up, tighter budgets, competitiveness was there, and that's next to a very tough economic environment. So extremely, tough, challenging circumstance, not only for insurance companies, but for customers. And I think that if you take a look what the solution to all of this is very simply, it's making use of the technological advantages which we now can make use of. And that requires insurers and startups to take a look how we can combine forces in order to make sure that we actually survive the current struggle in the storm which is amongst us. Because there is a storm amongst us, it's just a matter of how we actually manage that storm, because this is something we can manage ourselves as insurance industry.
And I mean, you mentioned customers there going through quite a tough time. I don't think that's going to be news to anyone either watching this at home or in the office or wherever they are. There's an important role that insurers can now play, similar to mid-2020 when we were going through our second once-in-a-century crisis since the turn of the millennium. We're now going into the third. Is there a role to be played by insurers in terms of giving assurances to customers over how both effectable and affordable their cover is, Marguerite?
Yes, for sure. Yeah, so Merlin, I think that what you see is that so the knife is cutting the cake at two ends. On the first hand, insurance companies still have legacy systems, which I will talk about in a minute, might also be a benefit now. On the other hand, the customer experience is increasingly speeding up to next levels. All of us are used to Ubers, Amazon, etc., and expecting insurance companies to provide the same service, to provide the same multi-channel payment form solutions, etc. As insurance industry, I think we can note that, one, we've been particularly slow in developments. In principle, our systems have worked for over 400 years, with commissions, etc., when they ever started at Lloyd's Coffee House. So at the moment, we're being faced with technological advancements, which are very, very fast. I think the big question for the industry, and especially the C-suite of the insurance companies and broking houses, is how do we adapt the technology into our business models? And how do we, as quickly as possible, learn from it? Because technology is abundant, but the way we manage and the way we actually implement it in our systems, processes, etc., especially claims and underwriting, is extremely interesting for artificial intelligence, etc. It's going to be crucial. And this requires, next to adapting to the new circumstancing, adapting to the speed, is also, I think, requiring us to become a little bit more transparent about how we deal with business, how we want to move forward. Because our customers are really looking along. And I think that in the management, we can say that, the walls of concrete, which we've been used to, have become walls of glass. If I look in your window behind you, and those walls of glass, everyone is looking along. So it's important to make sure that all the possible stakeholders are taken along in these journeys and actually are managed accordingly. And that requires, leadership skill sets, which are inclusive, which are adaptability, which are empathy, which are listening, and doing something with the listening. And just for everybody on the call, there was a recent research of Egon Zehnder, in which it was found that the C-suite apparently considered themselves to be very bad listeners. So that's something we as a C-suite, I think we should take in accordance. We should make sure that we do listen and we do act and we do follow up accordingly.
Well, I'm not going to comment on my glorious guest listening ability so far. I've been very impressed, but it is an interesting point there. And Marguerite, you raised, not Ali, I'll come to you on this. There's kind of two questions I want to put to you here. One is this all about leadership? Is it all going to have to come from the top down? Are we looking for maybe innovative ideas from across the organization? And then the second point I'd like you to follow up on is just still keeping it on this customer ideas and the fact that there is a very tricky time for pretty much everyone around the world economically. There's got to be a need to show that there's got to be a need for insurers to make the case to customers for funding for their future as well. And are those two things very much linked as well?
I think they are linked, and I think the relationship between the two is that there's the change that's needed to deal with an increasingly complex world, and the skills that we as an industry need to make sure those changes are brought about for the good of our customers. The question, to Marguerite, initially started off with a question about assurance. And I think for me, in an increasingly complex world, what's important for customers is clarity. There is so much that we can do, I think, as an industry across various different types of, insurance line, where the words and numbers we use could be made slightly clearer. If I think about health insurance, terms like medically necessary might mean very different things to insurers and to customers, and even different physicians of the same specialty. If you think about outcomes and how they're communicated, a lot of what people see is marketing or comparison sites. Some home insurers, however, might pay less than 2/3 of the claims made to them. Some home insurers might pay almost 100% of them. I think there's also insurance on the point of affordability too. So being able to communicate what we're doing to help manage people's costs and helping people understand that their premiums are going further. And I think finally, when you think about the underlying delivery of insurance, it insures you against risks, but the impact of that's huge. This is about people getting mental health help within days rather than potentially longer. It's about people knowing that if their roof has fallen in, the costs will be covered, but they'll also have somewhere safe to live. It's about, after a life insurance payment, family having the money to rebuild their lives at the pace that they can without incurring significant stress. And I think leadership's needed to help communicate and build those vision, help align great people, and to Margaret's point, continue to improve to drive the change that we need in the industry.
Yeah. Ali, maybe to react on that, I think that what I'm seeing is also for 2023, given what we saw in 2022, Merlin, Ali, we see low premium growth is expected. In 2022, the premium on property casualty was 4.5%. It's now expected to be approximately 1.5%. So that's a lot less. That's, of course, because of higher interest rates, inflation, the tightening economic outlook, and the weakening economic picture and the cost of living crisis for our consumers, whether it's, it's the insurance companies or the consumers, everybody is being affected by what we see as a crisis in the economy. I think that pressure on this will actually imply that, because of the less premium income growth, because of less car and home insurances, etc., to be sold, I think that it's crucial to take a look at any opportunity to reduce cost, and technology is key in trying to reduce cost. That's a key factor by which you can reduce cost. That's one. The second one is to take a look at, back to inside out or outside in, because that was also a question, was actually your remark, if you take a look inside, what's your talent? There's a war for talent ongoing. So you need to be extremely cautious, because you need to guard your talent in your organization. It's more costly to get rid of people than to hire new people. So because the hiring of new people is going to be more expensive. I think that summarized, if you look at the market circumstances, you need to look at both solutions, inside and outside, and find ways to manage them.
I think those are fantastic points. And just to add, in terms of thinking about the overall affordability, more and more we, as an insurance industry, have a stronger and stronger responsibility to help our customers manage their own risk, which will also help substantially with affordability. And that's everything from telematics, leak sensors, home alarms, flood defenses, helping people get healthier. I mean, if we think about the car insurance example in the United Kingdom, they are accidents, but we have over £20 million a day worth of accidents. And actually, if that number can come down substantially, every stakeholder in that ecosystem would benefit.
Yeah. Yeah, one remark also in that respect, in affordability, I think that as insurance industry, I already discussed this. How do we look at all the various solutions, cross-selling, omni-channel, etc.? I think it's extremely crucial that also we look at, embedded insurance as a service, something where, by the way, a lot of startups are pretty interestingly very good at. How do we deal with that? And if I look at the various stages, we, of course, we bought an insurance when we went flying, life insurance. That's your business, by the way, Ali. At the time, I think that was 1.0 of stages in embedded insurance. Then we started, looking at car dealers selling insurance when you buy a car, and now we also are, selling along insurance opportunities when you buy a ski pass in the mountains. So it's important as industry that we align our products, not only the affordability, but also, the flexibility towards the need of our customers. And Ali, I think I recognize some dinosaurs behind you and rolling over your children. I think otherwise our industry will be the dinosaurs. We will no longer be there because the Teslas, the Amazons, and all the others have taken over. So it's crucial that we adapt, that we align ourselves, and that we make sure that we, manage our costs and our products and affordability, but also, the interestingness of our products to our customers in the best manner possible.
You've mentioned the big tech companies, and Marguerite earlier you did mention AI, etc. And let's come onto that technology set piece in just a second here. I've noticed there's just a few issues with the Q&A functions. They might not be the Q&As, the questions that are being asked might not be showing up in everybody's public chat box. Do you ask those questions? Put them in the public chat. I will then move them to the Q&A section, and we'll make sure that we ask them to the presenters in about 15 minutes time when we come to the end of this discussion. But now swiftly moving on to the tech. We love talking about shiny things. We are, of course, Insurtech Connect and the digital insurance agenda. I mean, we've briefly touched on the effect that COVID had. We obviously saw waves of investment, the likes of which we probably hadn't dreamed of in the insurance industry before. Ali, if you could come in on this, given that we saw that increase in tech adoption, do you think we'll see companies focus more heavily on the successful projects that they were already working on, that came out of COVID? Or is there going to be more expansion into, perhaps more, more experimental projects?
I think it's really tricky to say. I suppose the way I think about it is that technology spend is going to continue going in one direction. I know that in 2021, depending on which report you look at, between $10 to $15 billion were invested in Insurtech alone. That number came down slightly in 2022. But all the larger companies I'm speaking to are continuing to ratchet up their tech spend. I suspect what will happen is that there'll be a continued investment in tech by larger organizations to help transform their core operations, to give the kind of experience and products that customers want, to give flexibility, to give agility. But for newer services, a lot more will flourish in the areas of partnerships, in the areas of strategic collaborations, and also in the areas of mergers and acquisitions to help build new capabilities and rapidly that way, perhaps unencumbered from, I think, challenges for capital and for time and energy and attention.
Yeah.
Oh no, go on, Marguerite.
Yeah, Ali, I think that what's being foreseen for 2023 is first competition between legacy insurers and the startups. So the incumbents versus the startups. Where, of course, you already mentioned the CBI Insights has shown that indeed, the funding of startups and Insurtech startups, dramatically decreased the past year. And so that will leave startups without the right liquidity, without the right fundamentals in a very volatile position. And I can expect, in that respect, that given the situation, we've already seen it sometimes happening in some instances that, the legacy insurers will start looking at startups which are a contribution and add-on to their services, and especially will help them with the speed. And I think also the intense consumer demand. I think, however, that the one thing which I would like to say is that also there's another element to that, and you've seen it in the UK with Aviva lining up with Lemonade. You see, of course, also the big names, the incumbents do have the brand names, do have the building customers, etc. So it's going to be a challenge the next year to see what's going on. I think that partnering for a number of startup and stacks will be really interesting. If you're not strong enough, you need to take a look how you will survive. And for the incumbents and the legacy insurance, this is the way forward, to acquire new talent, to make sure that you have the newest technology, but also to take a look whether you will find some new technology which helps you, benchmark and leverage your legacy systems. Because I think that's the challenge, Merlin, for the legacy insurers. We have those legacy insurance, old computer systems, IT systems. They actually have lots and lots of interesting data, but we need to convert them into usable data and structured data to our benefit.
I think to our point as well, as the larger insurers progress too, a lot of this technological investment is being made on experience. And that to me is absolutely a step in the right direction too. In insurer ecosystems, typically we tend to think about insurers as being 10 to 15 years behind retail in terms of the experience that can be given, and that gap absolutely has to close. And as Marguerite said, lots of these early stage companies are helping close that gap through partnerships in other areas. I think the other thing that's interesting too is insurers are taking on more accountability for the life cycle of their customers in a given area, not just claims. So in terms of helping them think about the services that they can provide, we're seeing a lot more in terms of value added services from all types of insurers, and a shift in what's being offered. If we think about that shift of what's being offered here at Vitality, for example, in our health business, we did very little in the way of primary care consultations when I joined in 2015. Now in 2023, they are the majority of what we're tending to fund, because that's what customers have demonstrated need for, and that's where there's been the demand.
There's something I want to bring in at this point, because we've spoken about these macroeconomic trends. We've spoken a little bit about the technology, and there's one thing that we've yet to really touch on properly, which is the workforce challenges that we're all facing right now. I mean, the great resignation, great reshuffle, great reevaluation, depending on which leader you speak to. this has actually been a problem for the insurance industry for quite a while. Not necessarily the Great Resignation, but more the Great Retirement. There's been a lot of people, a lot of insurance executives leaving the industry with no one to take their place, and this talent shortage has been a real pressing issue for a while now. The boots on the ground, those are the people who make sure that the technology implementation goes well. And so I'd like both of your thoughts on this. Marguerite, we'll start with you. How do you think these workforce challenges are going to affect the insurance industry's ability to make the best use of the technology that we all want it to adopt and keep adopting more of so much?
Now, yeah, there's a famous saying by Doc Conant which says, in order to be successful in the marketplace, you need to be successful in the workplace first. And Doc Conant was the CEO of Campbell Soup, and when he became the CEO, he needed to financially restructure, but also noticed that diversity, action, and inclusion was key in order to survive, and he did so. So back to the workforce, I think that you see that there's scarcity, a great deal of scarcity in numerous jobs at the moment, wherever. So that means that for whatever jobs, there will be, a war for talent ongoing. And especially in the insurance industry, I think it's crucial to take a look at how can we educate our workforce again in a manner which provides them also with the skills and capabilities they need today. If you look at the Yuval Noah Harari, everybody knows him, Lessons of the 21st Century, he's been stating we need to unlearn our fundamentals, and we need to learn new skills and capabilities for future use. Many of those capabilities are requiring digital knowledge and digital skills. And if you take a look back at what happens due to COVID, of course, COVID accelerated the digital transformation, also in insurance, and gratefully so. Never, I think, we've seen so much change in such a short period of time in our industry. But now we need to go to the next level. And it requires us to really make sure that, back to the war for talent, that we do make sure that we attract people, that if we don't, that we also attract maybe people who don't have a graduate degree, etc., but who we take in apprenticeships and we educate and we help them to learn the skills required. The elderly in our workforce, we need to make sure that we actually take them along as well, and that we relearn, that we unlearn the fundamentals, but that we relearn the required skills and capabilities of now. I think what you see is that there's a lot of things about ChatGPT. So there are new technologies which can help us to focus on the skills and capabilities we need to have. So, it may be writing is maybe something ChatGPT can do. Maybe, there are other skills and capabilities, judging claims, the moral hazard, etc., which humans need to do. So we also need to take technology forward in our processes and our actions and whatever we do every day. And then focus, where we need human talent to make sure that that talent is actually attracted, also kept and retained. And also, and I'm the chairman here of Holdings, but also I'm very active in diversity, action, and inclusion, also making sure that we attract female talent, any talent, people with a disability, and that we make sure our working environments are actually fit for them.
Ali, why don't you come in now?
I agree with everything Marguerite said. The war on talent, as many people have described it, is a really challenging one. And if I just share a few reflections from my own experience. Firstly, we've seen that some areas of classic insurance roles, such as underwriting, are becoming increasingly competitive to the point that the growth in expectations of people in these areas are growing higher and higher, in terms of a shift to using more data, in terms of a shift to, I suppose, more collaboration and holding one's own portfolio, and in terms of thinking what the future is. And we're seeing a dramatic shift in terms of what the expectations are for some of these roles, and also the ability of these roles to further empower growth and productivity through the use of technology. What that means, I think, for organizations is that they'll need to be very, very forward-thinking and think about the kind of skill sets they need to use in 5 or 10 years, because they may need substantially fewer for a given role, but actually the technological expectations for that role, from working with models, from working with data, from working with other kind of AI tools that will be present 5, 10 years from now, will be very different. So I think all organizations are having lots of reflections about what work looks like in the ChatGPT era, from your marketing department to your actuaries. And it's unclear how it's going to pan out, to me, beyond the fact there'll be a lot more technology and potentially fewer, more highly specialized roles.
And Marguerite, go on.
Now, yeah, I think that this is, also here the knife is cutting at both ends of the cake. So one is, if you take a look at Randstad has a study, which research called Work Monitor, and it is identified that 41% of the people actually being questioned, which were all over 5 generations active in the workforce, have answered. So 41% has answered they don't want to work for a company which doesn't represent their values or their norms. Interesting, because we already noticed that there are dilemmas if you work for a company who maybe has a very bad climate change policy, and you are very much in favor of a better climate yourself, that there are some issues at hand. And that's also affecting the war for talent. So it's important that companies make clear their purpose, how they relate to people, planet, and profit. On the other hand, and this is the consumers, they're voting with their feet, as we say in the Netherlands, because it's now from a PwC study, it has become clear that 1/3 of the clients are moving, to a different brand, even while they've been with you for a very long time. 1/3 is moving after one single bad experience already somewhere else, which is just unheard of. We have been in a market which has been extremely stable. If you are with a bank, you stay with the bank. If you are with an insurer, you stay with the insurer. And at the moment, due to the speed and transparency, also with all the various independent websites, etc., you see that we have a choice. And so as an employer or as an insurer, we need to make sure that we are the employer of choice and the insurer of choice of those clients by aligning with their needs and requirements. And that requires proactive thinking, proactive aligning products, policies, wordings, etc., the whole process. And it requires, the use of technology.
Just want to remind all the attendees very quickly about the Q&A function on the right-hand side of the screen. If you put it in the comments, I will add it to the Q&A section and publish it there. Do make sure you upvote the questions that you particularly are interested in. We will be coming to that in about 4 or 5 minutes' time. Ali, I see you nodding your head, so don't want to keep this from you any longer. Why don't you jump in?
I think just building on what Marguerite said, when we think about what will attract the workforce of the future, there's a big part about impact. There's a big part around excitement, and there's a big part around fairness too. I think from an impact perspective, this is a global multi-trillion-dollar industry, and it's one that actually has tremendous, tremendous human impact, as we talked about earlier. I think generally, I've not seen it done particularly well at an industry level, communicating to people joining the industry at any point quite how much impact this area has, with a few notable exceptions, of course. So continuing to kind of focus on that more widely as an industry is important. Secondly, in terms of excitement, there are so many areas where the insurance industry is actually at the forefront of what's happening. And that goes across data science, it goes across the use of drones to kind of survey areas of risk and to identify areas of claimants, etc. And I think finally, fairness is probably the other side of the coin. There is a perception that insurance is not always entirely focused on giving customers the best possible outcome. I think work needs to be done to continue to build the narrative and the data to actually dispel that and to continue proving to people that actually it's a truly important pillar of society and its financial and protection ecosystem.
And just finally, I'd like to get a very, very brief thoughts from you both before we go on to our Q&A. Overall impact on the industry. Marguerite, we'll start with you then. Ali, I'll move over to you. What do we think this overall impact is going to be? And feel free to choose short term, medium term, long term, as you wish.
Who do you want to start, me?
Marguerite, we're starting with you.
Oh, sorry. Now, I think that we're living in very challenging times. There are existential challenges which are facing society, and as an insurance industry, already as society as such, it's a challenge to take a look how we align our interests together. So you mentioned that the insurance industry, Ali, that it's seeing some difficulty to find an all-aligned policy. But even in the Dutch society, now related to Dutch society, we're looking at what's our broad carried vision and strategy in respect of climate change. We will have that CSRD directive coming up, which implies our clients to start reporting quite in detail around these kind of topics. And it requires also, as an insurance industry, to take a look, what are the risks involved? So I think it's important for me, the vision to the future is making sure that your products align to the needs and the requirements of our clients, that our processes internally are managed as efficiently and effectively as possible using all available technology. Making sure you learn from the technology, making sure you adapt your business models, and make sure that all those various new solutions and innovations which we've discussed, whether AI, machine learning, embedded insurance as a service, that we make sure that we keep on innovating and that we keep on looking what's around us. And, for me, the quote of Jack Welch always stands out. If the pace of change outside your organization is faster than the pace of change within, the end is near. It's just a matter of when the end is near. Now, that's what we need to be thinking of, back to the dinosaurs in the back of you, Ali, about how do we relate? Are we going to be survivors? Or are we going to be the dinosaurs of whom, in 300, 400 years, people will discuss, those people knew that something was going on, but they didn't act or react?
Yeah, Ali, your thoughts?
I think Marguerite put it extremely well. Things are becoming more and more challenging. The world is moving more and more quickly, and consumer expectations are getting more and more challenging and harder. I think in that mind, we need to think about the skills, capabilities, and culture that we use in the ecosystem to succeed. And finally, not to lose sight of the fact that despite what seems to be a more difficult environment, there are so many bright spots that I hear about every single day, from what different insurers are doing to make things better, to help reduce and spread the risks that exist intrinsically, and actually to help minimize those risks overall in the first place, which means there is a bright future. It's just a lot of work to get to it. We'll get there.
Well, a lot of work is good. Wouldn't be worth it if it was easy. Let's now move over to our Q&A. So we've got some great questions in here. And sorry to our speakers, there's no preparation involved. I'm just going to have to fire them at you. But there's a really interesting question from Mona. Thanks for your question, Mona. How well do you think insurers are prepared for analyzing and using the huge amount of data available today from clients for the benefit of both insurers and clients? And she thanks us in advance, which is really nice. It would be probably interesting to get both of your opinions on this. Ali, I'm going to come to you first, then Marguerite. Ali, your thoughts?
I think it's different for different insurers, but the direction of travel is a singular one that organizations are using more and more. The example that I like to give people that gives you a sense of what we do at Vitality is that for each specialist that we work with, where we fund healthcare on behalf of our customers, we have up to 400 data points on the activity each one undertakes alone, for more than 20,000 of them. And I think from our perspective, the reason this data is important, not just for the benefits of both insurers and clients at the point of claim, but actually long before that, in terms of thinking about their whole wraparound experience and helping them make decisions about the kind of care they want to have. Similarly, as a home insurer might have a panel of providers to undertake repair works.
Yeah. So, Merlin, from my end, I think data is the new oil. We used to have an oil economy. If you take a look at the top 10 companies globally a few years ago, were all oil companies. At the moment, they're all data-related companies, whether it's Alphabet or Apple, you name it. I think if I look at the collection of data, of course, we have strict, and I'm from Europe, European regulations around, how to use data and to transit data, etc. So those things taken into consideration. I think data is the new oil. It's extremely, it's empowering you to do the right things. Whether it's I already went and do it. Whether you use your data in your old legacy systems, which might provide extremely interesting things, which you didn't know. They might contain unknown unknowns, and by using new technology, you might find new solutions and new ways to go forward. But also with the startups, we're using the new technologies. If you combine those efforts as incumbents and startups, I think you might have a powerful combination of solutions which help you forward and, can make sure that you still exist going forward. But data is the oil. I'm convinced of that. And also in everything I read, if you take a look at all the insurers active, making sure that they have the right data to find the tailored solutions to their clients, it's going to be the differentiator for insurance companies, whether they use the data they have or whether they don't.
And moving on, we've got another question here from Sarah Wright. Thank you, Sarah. Do you think we'll see different metrics used to define the successes of business models? I think that's quite a fascinating one. Again, would be interesting to hear both of your opinions. Marguerite, this time we're going to start with you, then move on to Ali. So Marguerite, different metrics used to define the success of different business models.
I think that if I translate this also in different business models, but also different leadership skills, I think that what I notice is that definitely we've seen some changes in the way people are managing and leading organizations. In the past, it was much more command and control. With all due respect, some masculine leadership skills. At the moment, you see that we've seen more attention also for feminine leadership skills, especially in data and in digital. There are some soft skills which are collaboration, etc., compared to, on the other hand, some web, designing web and designing data, etc. But the soft skills are extremely important to be successful. And in my opinion, the right leadership skills, are being identified for the state-of-the-art time we're in at the moment. And then you move forward, whether they're feminine or masculine. But back to your adaptation to business models, they will be adapted at the moment because they need to. There are some things going on with data which empower you to go much faster, to do deeper, and you will need to align. So my prediction will be that things will speed up even further with technology there. The business models will adapt, to go from personal face-to-face to much more 24/7, digitally enabled business models. And that's also what our consumers expect from us. So I think we're actually, in this respect, aligning to market expectations and consumer expectations.
Mm. Ali, your thoughts?
So I think that the kind of core outcomes of any business, so reach, impact, growth, profitability, and are not going to change substantially in terms of the core things being measured. The two changes that I see, which are already happening, are firstly, what impact, what success actually means is going to include much more. The impact that you have on a sustainability basis, the culture that you're generating, how your employees feel about the organization, everything that Marguerite and others have talked about previously.
Yeah.
Secondly, I think the intricacy of how these metrics is going to continue to become more and more detailed. And so the number of different metrics and the interplay, the relationship between them, that causality that you have all the way between, which box or which referral link someone clicks to the journey that they'll take at the end of their insurance purchase process will become more and more closely monitored. And the algorithms and the data that define what different experiences people have will be treated more and more like employees rather than machines or boxes.
Mm. We've got another question here that actually is both applicable. Well, it's applicable to both of our speakers today. We've pretty much got all lines of insurance covered here. So Henry Williams asks, which lines of insurance do you think will see increases in claims this year? Let's add in to the increases line, a spike in increases, shall we? And we're going to go back in reverse order. So Ali first, then Marguerite. Ali.
Unfortunately, I'm struggling to think of many lines of claims which, at a global level at least, won't see an increase. You need to think about the drivers, I suppose, for the increased likelihood of someone to take out a claim, for someone who's on risk to be making a claim, and then for someone to kind of really want to follow through with it rather than, I suppose, not registering one for any reason. And across, P&C, health, life, there are no areas where I think actually there'd be a substantial decrease in claims.
Okay. Now, so this is, of course, the glass ball, I feel like Harry Potter now. But I think personally, I foresee that there's going to be asked more accountability from directors, from the C-suite. So I think directors and officers' liability also because of climate change, Client Earth actually suing the directors and officers of Shell in the UK. So I think that D&O will see an increase also because, people need to start reporting on various topics, but might find difficulty because, the numbers they can report, but how do they qualitatively in their annual reports describe certain situations, like what they do for climate change, etc., the scope 1, 2, 3 emissions, etc. So that's D&O. The second one, I think, is cyber. I think that there's a huge we've seen, ransomware, etc., increase the past year. We are so much dependent on our IT systems, etc., that it's really difficult to keep up to speed with all the various changes going into that area. And so it's for insurance companies instrumental to invest in the right proactive security policies for their IT systems. But I think a lot of our customers, while they would like to make sure that they do as much as they can do, are not able to do because they are sometimes overhauled by the speed of what's already happening in that whole area. So, but then the question is, what's covered and what's not covered. So I think we will see anyhow discussions around there. And thirdly, I think, the general liability end with everything which is going on in life, people are suing each other for nothing. Because of course, there's a cost of living crisis. So if there's an opportunity to sue, they will look for it. And last but not least, hopefully not, we will see an increase of fires. But of course, moral risk, whenever there's a crisis and economic despair, the moral risk will also increase. So, I hope that I'm not too gloomy about it, but hopefully I'm wrong.
For the sake of insights, very, very bittersweet, but I do hope you're wrong as well in terms of the global outlook. We've got time for a few more questions here. So very interesting one from Gunjan. We're going to keep this going. Both speakers are going to comment on this. Gunjan asks, overhauling legacy technology will be a big task for large-scale carriers, of course, with claim payout volume and value increasing. Which processes or functions will be low-hanging fruit to create use cases or proofs of concept for others to follow? So, as always, we're going to go back in reverse order. Marguerite, you first. Where's the low-hanging fruit?
This is, I do think that, so I'm not the IT expert. Let me first put that disclosure down. But I recently attended a CEO roundtable at IMD in Lausanne, and this was the topic. How can you actually, with new technology, align old technology, old IT systems and old things, and, to get the best out of it? And there's so much possible already that from time to time, I think the biggest thing is go out questioning things, and logic will take you, as Einstein said, from A to B, but imagination takes you everywhere. So be aware also that there are a number of things which you don't know. You might have blind spots, and go out and look for those blind spots, because especially in these legacy IT systems, there is a lot of blind spots because we think things are not possible. And with new technology, things are possible. And they might give us new data, new structured data, and they might give us insights and things they were already known before, but we never knew them. So I think back to the question, extremely interesting times ahead in that respect as regards how we use the legacy. And this is an advantage for the past years. When we had this discussion, we discussed that legacy IT systems were actually a disadvantage, but now the time has come with new technology for the insurance, for the incumbents to actually leverage their legacy systems. So I think huge opportunity, but you need to have the right IT experts on the case to make it happen.
Ali?
This is a really difficult question because I suspect the answer will be different in different geographies and different types of insurance. I think when you think about it from a top-down perspective, there are a number of different things that you can automate. How you market and sell processes, how you market and sell policies, how you go through the underwriting phases, how you administer policy changes, how you administer a claim, and how you deal with problems. Ubiquitously across each of these areas, the feedback that I get from people across the ecosystem, customers, competitors, collaborators, etc., is that one of the most important things you can do using technology and should focus on early is to communicate with people where they are in any stage of the process, whether it's underwriting or whether it's a claim. That addresses one of the key complaints that often happen, I think, in an increasingly challenged service-focused time, where people aren't clear on what the next steps are, so the life insurance claim, or don't know when they're going to hear from someone about their home insurance claim. Giving people that feedback can have such a huge lift off, I think, the operational demands of servicing customers, that it's an area that I'd encourage any organisation to focus on when thinking about where to invest from a technological perspective.
Right, well, that is all we have time for today. Apologies if we didn't get to your question. That is just the way the cookie crumbles sometimes. But thank you so much to everyone who tuned in today for the session. Of course, thanks to our wonderful speakers for their insights. Marguerite and Ali will actually both be joining us at ITC DIA Europe in June in Barcelona. So if you enjoyed this session, do grab your ticket so you can see them again, of course, with that discount for today's webinar attendees. There, I promise that's my last bit of shameless self-promotion for the day. As you leave this session, you'll see our webinar survey. Please do let us know what you think so we can make things better for you. And do keep an eye out for our next webinar, where we'll be joined by Emily Brightbird, CEO of Lloyd's Europe, along with graduates of the Lloyd's Lab. We'll be discussing how to close protection gaps in climate and cyber insurance, so make sure you watch this space for your invitation. Thanks so much to everyone involved. Enjoy the rest of your week. Marguerite, Ali, it's been a real pleasure.
Thank you.